I'm joined by Jake Yu, goes by, what is it on Twitter? Is it Jacob Urry on Twitter?
Yeah, Jacob Urry. Yeah, it's
Great.
spelled phonetically correct there, so it's Yurri.
Great. And then on YouTube, you are Jake Yu as well.
Yeah, Jake Urry, spelled Urry. It's not Russian. It's actually sounds
Okay.
Russian.
Okay, Jake. Well, we've done this a few times. Very glad to have you back. We're going to be talking about Palantir LEAPS today, which is a long-dated form of options. Very excited to have this discussion, talk about conviction on Palantir, this being more of an investment slash trade. It's really putting a time on an investment. And we've seen such a drawdown in Palantir. I'm very excited to hear your thoughts and opinions on this investment. You told me that you haven't had so much luck with these Palantir leaps in the past, which I think it just can be explained by the chart and the price action we have seen. But
Yeah,
super excited to share this conversation with everyone. So thank you for joining.
yeah. Thanks for having me again.
Yeah, so I thought we could start off with getting your current thoughts on Palantir. And the reason we're even having this discussion is I saw on Twitter you had said there's a headline risk of the SPAC investment loss hitting the EPS, and this being a quarter, a bit of a wash where Palantir will miss earnings estimates, which is exactly what happened. And you said on that headline risk, you were potentially looking to pick up some leaps after earnings. So here we are. It looks like, and you've told me that you've done that. So what are you thinking about this quarter? We've gone through it. We see Cathie Wood selling out literally after the quarter, like awaiting awaiting results,
Yeah,
or just using it as an excuse to close the position. But we saw strong commercial growth in the U.S., a little bit weaker from like Europe and the rest of it. And, government side not really carrying, but I think that is seasonal and has been
yeah,
expected with that. But yeah, what are just your general thoughts seeing the stock all the way back down at DPO prices?
yeah, and even below that $10 at one point. Yeah, I think like obviously there's just so much macro. I mean, this is the macro environment driving the stock down, and that miss on EPS certainly didn't help. A lot of the selling pressure late last year. Luckily, we don't have that same selling pressure going on now from insiders with their options and RSUs, things like that expiring. But with Cathie Wood, um, yeah, it's been a lot of selling pressure, and not necessarily that she's lost all faith in Palantir, and their business model, but um, it's just that she's using cash even at a loss to allocate to higher conviction stocks, which I may disagree with on the thesis of those different companies, but all of these working against Palantir to get it back down below that DPO. And from what I saw of their earnings, their EPS miss was kind of artificial, with that unrealized loss from the SPACs, which most of us knew was coming. And so it seemed like a good opportunity to throw in some leaps, because I thought it was a great quarter. And part of my thesis is that in this kind of macro uncertainty, especially with the logistics supply chain issues, a lot of the disruption that's currently happening with Russia and Ukraine, the supply chain issues like food and energy and the knock-on effects that this is going to have is only going to make it more necessary to try to integrate these solutions that Palantir offers into your company to be able to have more control over your CRM, ERP, and especially ERP, to know where your shortages are and where your assets are, and how to maneuver that effectively. Kind of goes back to what Karp has said about every company will be a software company. It's akin to it's becoming akin to not having a website. And I mean, it really will be and these companies, they don't have the expertise to build that in house. I think a lot of people that invest in tech, they take that for granted. And not everybody, but like take for granted that not every company is going to be able to implement these like the more off the shelf solutions like the ERPs. And I mean, that's why they have a poor net promoter score. And that's why like they just like enterprise software is terrible.
Yeah.
And because implementing it is so hard, and Palantir seems to have gotten by that. So from here on out, especially their involvement in defense, I think there's more of an asymmetric risk reward there that it will do well despite further macroeconomic pressure, especially in the 2-year options that the LEAPS provide.
Yeah. So we'll get into the leaps, but to see Palantir come into the year at about 18 or so and to fall so much further after already being down, I think that was kind of a like seeing it under $10, completely erasing not only its full life as a public company, but not
Yeah.
even completely discounting all progress from the business since that point. Yeah, it just seems kind of ridiculous to see it around the $10 range. I completely understand the current macro conditions resulting in what we see right now, and I don't think that is completely irrational. I wanted to, on the leaps, talk about so like what is a leap option? So fill in the blanks on what I leave out here, but basically a leap is just a long dated call option, and a call option being you're paying the premium to have the ability to or the right to exercise, or just I guess you could say just follow along with 100 shares of the underlying stock. So with Palantir, a leap just being the long dated call, you're bullish on the stock. So you're saying for every one contract I buy, I want to control 100 shares of the underlying. And in the case, what we'll be talking about today is the furthest out for leaps for Palantir currently are January 2024. So we're talking just under 2 years at this point. And with call options, you have a strike, and anything under your strike, finishing at that date, you'll actually lose the whole worth of the contract, and everything above it, it's essentially leveraged, a leveraged return past that, with, of course, the risk of losing the entire contract because you're not going to exercise your option when the stock is worth below that. So it is essentially worthless at that point. But what am I missing on the explanation here, Jake?
It can seem like it's pretty far out until but a lot can happen in 2 years, and that's why leaps. The further out you buy them, any call option, the more they're going to cost, because a lot can happen over that time. So you're paying for time. You're paying for the market to change its opinion on the company that you're investing in. You're giving that company 8 quarters to perform well, to your thesis to come to fruition. And a lot can happen in that time. And but I've had leaps on Palantir, and leaps are anywhere from a year to longer. So they're long dated call options. Yeah, I mean, like you said, you can lose all of that money, or a significant amount of it if you sell out early, and which I'm definitely not opposed to. I mean, I'm not blind to what goes on in the macro environment, or if their performance starts to degrade materially in the coming quarters. And we shouldn't dilute ourselves with our conviction with the stock. If their push to expand their sales force does not take off, we should not just die with the company, or or flounder as it traded sideways for the next 2 years. Um, so I'm definitely willing to sell out of a loss, pull chalks and get out of Dodge. But if I thought that was the more likely case, I wouldn't have bought them. I definitely see some price appreciation in the coming months and quarters, especially this year.
Yeah, so you're talking about with the leap, January 2024, you're paying the price premium to own that time. And how much of this investment is based on the price obviously coming down so much from the beginning of the year since earnings? How much of your investment is a reflection of the current price?
Yeah, that's a significant portion uh, of that, because it has come down so much. Um, but that's not to say that we couldn't see more pain. I mean, the I believe it was the Nasdaq, and I think the S&P. I think the S&P had a double top. But what we're seeing in most indexes is lower highs and lower lows. Um, where like that's typically, if you talk to somebody on FinTwit, like Markets and Mayhem, he's been touting very loudly that like you wait for a verified change in that trend before doing what I'm doing. Like, I mean, there's a case to be made that just because they DPO'd at $10 does not mean that it can't go well below and stay there for quite some time. But currently, where the price was, when I bought the options, as well as the significant pressure being put on the stock from Kathy Wood in the several days after their earnings, I thought, well, this is a significant amount of pressure, and it's holding up. Like, it declined, but held up pretty well to that selling pressure, and I thought that was a good sign, and decided to buy the leaps at that point, especially because I thought that the earnings results were very good, particularly in their increased customer count, and that's like something I've been saying for a while is their strategy. Most software companies, when you do acquire new customers, you upsell them over time, and you have that negative net retention rate. They're growing their accounts just as per their business model of acquire, expand, and scale. And they've added quite a few customers, even outside the SPACs, in the last couple quarters. This quarter being a really good number in their traditional customer count.
Yeah.
And so I'm all those factors combined. It kind of made me, it was an overwhelming motive to buy the leaps.
Yeah. And what I find interesting with the time frame of January 2024 is that we heard Carp talking about normalizing the stock-based compensation 7 or 8 quarters. Like, I feel like that's sort of aligning with the same time frame, but I'm not sure how much of an effect that's going to have. I wanted to share, since you were just talking about this, the acquire, expand, and scale. They actually broke it out in their, this is just, I just plugged it in the numbers, but they broke it out in their 10K. This
Oh,
is
wow.
2020 versus 2021. I'm sure there's a better way to visualize this, but 0.3 million, and this is 45 million for acquire. So these are in millions. And then we got, yeah, of course, 1 billion for the scale. But the real point to consider here is when you look, and these are not to scale, by the way. I tried to make it to scale, and the scale was just 100 times bigger. It wasn't going to work. But if we look at how much they've added to their acquire section of their sort of flywheel, if you want to call it that, is
Yeah.
is pretty tremendous. It's like I saw from Twitter, it's like 13,000% increase, which is obviously, I mean, that's not going to happen again. To see that, it makes you wonder what that's going to turn into, and if this is not just something special because of the SPACs. I'm not sure how they recognize that. Do you have any insight on that, other than this sort of being something that not many people have really brought up or considered, that the core business is They're like bringing in a lot of customers, as you're saying, and as they grow, like this is the story, right? This is the growth story. You expand and then you scale and scale. Once you hit scale, that's what really matters. So anything.
Yeah, exactly. It seems like the SPACs have quickly moved from. I really have to dig into this more and see where those the SPAC companies might fall, because they've broken out the different cohorts by year, but they also, from my understanding, they consider a customer to be in a different stage of acquire, scale, and expand, depending on how much revenue they bring in and whether or not they have positive or negative contribution margin, or basically, are we breaking even on this company, on this account, or are we actually making money off of this customer? So that it would be interesting to kind of dive in and try to determine, like, are the SPACs affecting this? Because in 2021, I believe they accounted for something like 46 million in revenue. The customers outside of the SPACs that they're acquiring, and their business model is to acquire large companies. Yeah, I've got the numbers for those traditional customers. From my estimate, they acquired 21 customers out of the 34 in Q4 were traditional customers, and that's up from 17 the quarter prior. And when I say like traditional customers, I mean those large Fortune 500, Fortune 100 companies. So if the SPACs, being small, aggressive, technologically a little bit more savvy, they can recognize and implement these things. They don't have bigger IT departments pushing back. If they have moved very quickly into the expand and scale phase, that's kind of like, I understand Wall Street's skepticism on that, but it's also a precursor of what will happen with these more traditional, larger companies. So to me, that's a very good and bullish thing when we're talking about what they intend to do with this customer acquisition, and why I was paying so much attention to customers the last several quarters. I think I estimated that they would get something like 37 customers in Q4, just based on like how many of each quarter are SPACs versus the total. So that would imply that the rest are either Foundry for Builders or the traditional customers. I take out the SPACs and Foundry for Builders, and you can see from Q1 to Q4, they've had of the traditional customer type, 11 increased that by 2 to 13 in Q2, 17 in Q3, and 21 in Q4. So, I mean, that's really, really good growth. The only question being, if we don't add any more SPACs, or maybe just a few in Q1 of 22, we may see that like a decrease in added customers.
Okay.
But it's also an increase in their really big bulk customer acquisition method. So it seems like they're pulling forward revenue, and a lot of people say they're buying revenue. But I think that as they kind of cross the chasm, we're going to see a snowball effect in customer acquisition.
Once you actually break out the traditional customers, because that's what Wall Street cares about. That's the real quality revenue, is what Carp's talking about. So what was it again? It looks like 17 from your information here in Q3. You said it was how much in Q4?
Yeah, so 17 traditional customers added in Q3 when you take out what I estimate the SPACs added during that time were. And then I use that because luckily an analyst asked in the Q2 conference call, or the earnings call, asked Shyam Sankar how many of the new customers were the SPAC companies, and he said 7 out of the 20. And so what I did was look at, all right, when were these first 7 announced? And then the way Palantir determines whether or not they can count a customer as a customer is whether or not they've recognized revenue from that organization. Okay. So they may have deals, like more deals with many more organizations, but because they haven't done the work and recognized the revenue, we're not going to see it there. The time from announcement that pipe deal with those SPAC companies to recognizing those 7 customers in Q2, I use that same time span over the next pipe deal announcements to deduce that, okay, we can estimate that about 12 of those SPACs would have been recognized in Q3, and then so on for 3 additional in Q4. So that's my Q4 estimate, where I guessed 38 customers added in Q4, and they actually matched Q3 and came in at 34 again. And when you look at that on the face, you think, oh, their customer acquisition is flat. But if you discount the SPACs, which was kind of like, in my opinion, kind of icing on the cake, I thought it was an interesting strategy, and well worth the risk in capital, because you get reoccurring revenue at the risk of balance sheet. Yeah, of course. Yeah, we're going to do that.
They have no risk on their balance sheet at this point.
Yeah, exactly. If they had debt, I'd be like, well, what are you guys doing? You guys need all those billions, but they don't. So I think this was a really good decision. But that traditional customer line from 11 to 13 to 17 to 25, you can see that trajectory. They're still expanding their sales force, and admitting, most importantly, Alex Karp is admitting that they are what they're bad at. He's calling out his company and saying, yep, we have been bad at selling to IT departments and certain organizations. And we should have expanded our sales force and fostered that in a different way and maybe earlier, which is important for B2B companies. You don't want to be late in expanding your sales force, and they probably were. But the fact that he's kind of turning that ship around is encouraging, and you can see the early effects in those traditional customer numbers there.
Great stuff. Yeah. So I hadn't realized you were doing work on, because I hadn't looked into it myself. You were sort of back solving for these SPACs based on when they're announced, and then sort of categorizing that for the quarter. So thank you for that work, because it does highlight the actual increase in the traditional customers quarter over quarter, with this being the estimated figure. But yeah, I think that's very important, and frankly, something Palantir should be doing a better job of explaining in the conference call and earnings report, because I didn't hear that. It's sort of back to the whole thing of like, what's the real reason for this SPAC stuff? Is it expanding the business, or is it masking the customer count? Which I don't think it is, but they could do a better job of explaining that and breaking it out. And of course, it's not like they have to, because it's not like it's the biggest thing. But at the same time, it's comforting to investors to actually see that.
Yeah, and I think that's just an artifact of a company that's predominantly run by engineers. They're what they talk most about these SPACs, like, they're not concerned about the revenue they get from this. I'm sure they are to a degree, but when they talk about them, they reference their benefit that they will provide Palantir's software and what Palantir they can learn from them, and the improvements to the Foundry platform will be. And so there, when management gets on earnings calls, they're just speaking a different language. They're saying, hey, our product's going to get better. We're going to offer new products, better products, and expand our TAM. But they don't say, they don't always say, we're going to expand TAM, and these are the numbers you want to hear. They're going to say, oh my gosh, this product is getting even better. And that's, I think, what they're focused on as a company.
Okay, great. We followed up on that. I want to, as this banner has been up the whole time, get into, as we've been saying, of course, the LEAPS, but thank you for the commentary there. I'm going to share Robinhood on another window here. Here we are on Robinhood, which Jake and I agree is a great visualization for options. I think one of the best that I have seen. So what are we looking at here, Jake? We've got the farthest out expiry being the January 2024 LEAPS. I think I may have actually saved that one, which is why it has a check mark. I don't own any, but here we are buying a call. What strikes have you been looking at?
The $20 strike on January 24. Yep.
Okay, great. So if we expand this a little more, and we will just say we'll add it to the side here. What are you looking at when you're going to buy an option? Are you looking for the break even against what you think the stock will be at some point in the future, or are you looking for the upside? Because this is currently out of the money at this point. Could you talk a bit about what thought process when you're looking at these?
Yeah. I mean, that's definitely kind of the biggest factor is not only what I think it'll be at expiration, but what it might do in the interim. And I think that in the coming quarters, what we've seen with Wall Street's issues with Palantir was first that they were so heavy on too few customers. And then it was, the government reliance. But they are expanding their customer base. I think that will continue and become very apparent in the next year or so. Government revenue has obviously slowed while commercial is just taking off, especially U.S. commercial. But I think what we'll see is that there's been a kind of a building up of pressure with that government revenue. I'm confident that they'll be able to continue to get very, very good contracts going forward. I think they put a lot of time, effort, and concentration, pulled a lot of revenue forward with COVID, and we saw great numbers, and it's been steadily declining. I think in the next year we'll see quite a bit of improvement in all of those areas, and it's kind of interesting. We all joke on FinTwit. You see a lot of people talking about how first the issue was, oh, it's too much government, and now it's like, oh well, not enough government. Which I understand the argument for. If it's slowing significantly, is that an indication to the lack in quality of the product? But the way I see the business progressing, I see that these issues are being resolved, and I'm confident that they can overcome them. So, if in the next year or so, I think that these will be worth quite a bit more than what I paid. That's definitely, I don't have to go all the way to the expiration. I think that they have a good year in front of them. There is tremendous risk with macro environment and many other things, but that's definitely what I consider the fundamentals of the company, cost of the option, where the price is, and what I think it can do in the interim.
I love that idea of there's lower risk the further out you go. Of course, you're paying more for that premium of the time, but you of course have the ability to trade. And what we were talking about even before is, in these sorts of market conditions, you want to take profits when given that opportunity. Like with stock, the way I think of it is like with stock, you only have to be right on the direction. Like it's up to you when you want to sell. You can hold it indefinitely. If you're doing margin, it's the direction of the stock. It's also the timing. So the entry and the exit, you don't want to be weighted too heavily and then obviously have a margin call or just lose a significant amount of the account value on the direction of the stock if you're wrong in the direction. But then with options, you really have to know where the stock is moving and like by how much, because if you're out the money, but it doesn't increase like past the strike price, it's not only the direction, but it's by how much as well. And of course the timing, because you can be right on an option and then still have it fall off and expire worthless. So there's a lot going on. I like the idea of paying that extra time premium and being able to, let's see what happens. This year, we've seen the stock draw down significantly. And really the way you want to think of it as an investor is like the lower the stock goes, the less risk there really is on the stock itself. Now with options, of course, there's so much going on. You can't really think of it that way. But given the stock being down so much, I wouldn't be surprised to see a significant rally sometime this year, moving past a lot of the troubles that the growth sector is facing right now. I don't know. Any thoughts on that, Jake?
I think that's something that I'm expecting to happen in the next 12 months or so. And I hate having to say this, but it is important for a lot of people watching, because we don't know who exactly is watching. But yeah, you should be prepared to lose all the money that you put into calls if you're not, if you don't know when to sell or under what conditions, you're probably not going to sell at the right time. And it's better to sell at a loss with some of your money than to wait till expiry and lose it all. Yeah, it's going to be a very, very complicated, time moving forward to evaluate, is this thesis still intact? And it's not as simple as here's what I did, and saying this was a good idea for everybody, because obviously they don't know under what metrics and evaluations I made this decision under, and if those change, they're not going to make the same decision to get out.
Of course, not specific financial advice for anyone watching, because we don't know your situation, and even still, obviously, this is a dangerous maneuver. But what I wanted to ask you, Jake, is because you told me, and I think you said on Twitter maybe, that you had sold some of your initial position at a bit of a gain. Making this trade, is it just to like add to the account value, or are you planning to exercise any of these? Like how like of the total amount, like half of them are you trying to exercise? Are you trying to increase your share count, or are you just trying to like make money on this trade? Like, what's the real rationale for?
Yeah, all the above. And like I said, it completely depends on what happens and when. I think Palantir's price action has taught a lot of people about, well, this move up could be very fleeting. And are you just going to watch it go up and not help help yourself long term by just watching it crash back down? Did it move up sharply because they blew earnings out of the water, and you have analysts initiating coverage on the stock and upgrading it? I mean, that would be a good reason to continue to hold those leaps. But if general market sentiment has changed, and so it rebounds on something macro that like with a $20 strike 2 years out, if Palantir recovers back to something like $15 a share, I'm gonna take profit, because if it's macro driven, we could head right back down the next week. And so I'll take that cash and probably keep it on the sidelines. I do have other cash available, but just kind of keeping an ear to the ground on the macro environment. And if it's macro driven, or if it's hype because they got a FDIC contract or something like that, and
What does that come?
yeah, right, yeah, I've been cross my fingers on that, but that's likely a fleeting contributor to the appreciation of the stock price. And so this all depends. I would like Palantir's stock to quadruple in the next 2 years, and then I can exercise those leaps and not have the tax penalty. But I'd rather make money and pay taxes than diamond hand to zero. So yeah.
Absolutely. And yeah, what's interesting, as you're saying, is the option value itself can increase even below the strike price or the break even, because like that's out into the future. So that's important to recognize. And yeah, I think what it sounds like is you're just seeing the stock where it is in its current value and saying, like, I'm expecting a rebound sometime within the next year, 2 year plus, see how it sort of plays out, take profits accordingly. Or like if it looks great, just continue to hold and exercise to turn the contracts, some of them at least, into shares at 100 shares per contract. And then, as you're saying, you don't actually recognize a gain. You're just exercising the contract. So no, that's obviously best case, no capital gains.
Yeah, exactly. I mean, ideally, maybe the Wall Street sentiment will improve on Palantir in the coming quarters. They'll be recognized for what I think are the technological advantages that they have over competitors, and the metrics that Wall Street really cares about will be communicated and recognized. And the stock will appreciate accordingly as the macro environment kind of eases up on that downward pressure, especially after the market gets some certainty with Russia, Ukraine, and Fed rate rises. Once that's priced in, or at least that we have that news actually occur when the Fed raises rates. All of that can affect what you're gonna want to do with any options you hold.
Yeah, I mean, it'll be very interesting to see. If you asked me like 3 months ago if leaps were a good idea, I was looking at them like it really comes down to the price, obviously, the price that you're paying, where the stock is. I think it is very attractive at this level. Of course, I would love to have a leap or be able to buy an option that's way more than 2 years out. But at that point, it almost turns into just holding the stock because the premium would just be insane. So I don't
Yeah.
know. I feel like still for most people, the best course of action, if you believe in the story, the stock, and Palantir itself, it really is just holding the stock at this point. But I also wanted to ask you: do you do covered calls at all? Have you messed around with that?
Not really on Palantir. Probably should have done it more last year. I've seen quite a few people on Twitter who made quite a bit of money selling, probably to me, some Palantir calls, covered calls. So you're welcome. But I done that with Tesla quite a bit.
Okay.
Yeah, selling puts and covered calls on Tesla, and that's very very attractive for Tesla, and I'm probably going to do that more with Palantir going forward as well.
Yeah. It just seems at this level, like it's not even worth it. At
Yeah,
this,
yeah,
like the stock goes up and boom, your shares are gone and you didn't even get that much.
yeah, yeah,
But yeah, would you be able to share the options profit calculator? If anyone's unfamiliar, it's optionsprofitcalculator.com. Fair warning, you might get a little excited by the the scenarios shown if you select
yeah.
select $1,000 for Palantir.
Yeah. So yeah, really, really good website. You can do all kinds of different option strategies, buying and selling calls and puts. You just simply type in the ticker, get the price, the current price, and then you select the option. So right now, the 2024 $20 call, you split the difference between the bid and the ask, is at $2.04. So that's per share and 100 shares per contract, which is the lowest that you can go will cost you $204. And so here you can see the chart of what the price action would do and the implied return. And you can set this to profit and loss, options spread value, percentage of entry costs, or percentage of maximum risk. But for profit and loss, we are currently sitting at 1147. So you can see where that line is here, and that very rapid acceleration or of return or acceleration of loss. The stock doesn't have to move very much to have either one. So we have a lot more macro uncertainty, especially as things in Europe maybe decline. I know Russia's been increasing threats of nuclear weapons and things like that. So yeah, you could see a huge 75% loss if we get back down to that range we were at just a couple of days ago. But yeah, I mean, this is a great tool to kind of visualize your return over the course of the option. And this is the option that I bought, but I paid $220 per share. So I'm in the negative right now, but I did take profit after I bought just a couple days after earnings. And then it was Thursday that we had that really nice green bar, and I took some stuff off the table there. I figured it might be fleeting. It was a lot of, I think, short covering rally what we saw late last week. So
Interesting. So let's say, for instance, if you could select, let's say the stock's back at, I don't know, around or slightly below $20 in September of this year.
oh gosh, yeah. So and this this is like, um, this is a good tool because you can see what's possible, but you can kind of like fool yourself into thinking like, oh, I'm going to be rich. You just keep increasing this range up north, and you're like, yeah, it's been there before. I can see that happening, and yeah, so that can be dangerous. So put it in perspective, like this deep red should always be on your mind. Um, but yeah, so at $20 in September, that's almost 200% gain. So yeah, 3x your initial investment.
Yeah, so it's interesting from this point at the stock, it would be less than, what do we have? 21. Yeah, so it'd be less than a 2x just on the stock itself. So you like with options, like accounting for the risk. Of course, that looks great, but I think considering the risk itself, you really want something well beyond that. Um, to have a tremendous gain.
Yeah.
So like just what are you thinking when you look at this? Because obviously you see over time the decay where you need the price to
Yeah.
rise over time.
Yeah.
Like in terms of Palantir, like you're saying, you're expecting, hoping for better understanding from Wall Street over the coming months, quarters, beyond that, or anything else, any commentary on just sort of overlaying this to the company and the performance of the stock?
I think we'll continue to see government contracts being renewed, new contracts. I think they're going to move down into smaller organizations. The market for not only federal government contracts but state and local organizations, to use Gotham, as well as at the federal level. I think we're going to see more of that, and more announcements outside of earnings. And then I think there will continue to be times that we're seeing this kind of short covering rallies met with further downturn, especially between rate increases. And we may not have seen the low for the year yet, and that's something that I'll have to be looking at. But I think certain sectors, certain companies will hold up well. I think Palantir is one of those. Especially given the conflicts in Ukraine, and the kind of rally off of the invasion of Ukraine kind of surprised everybody. But there is that kind of once the fear has been priced in and the event happens, there is typically that the covering, or okay, this wasn't as bad as what we priced in, but that it doesn't mean we're not going to retrace. And so I think we'll see a lot of that, a lot of volatility, and I'll be moving in and out to various degrees as those things happen. And again, it depends on how bad supply chains get, how difficult the Fed makes things. But I think they've been kind of forced to be less hawkish. I think the defense sector will perform pretty well. It was Germany that just allocated a couple $100 billion to some defense spending very recently, and I don't think that that's going to be unique for Europe or just a few countries. I think we'll see a lot of discretionary spending in the United States, and I think Palantir will be a beneficiary of that. So I'm hoping to play some of that volatility and up and down nature that I think we'll see for a while.
Yeah, yeah, I saw that as well. I think was it 100 billion from
Uh,
Germany?
yeah, I thought it was like 100 or 190 billion.
Yeah. I mean, that's
Uh,
very interesting. Yeah, I really hope Palantir can sort of seize the moment because we've heard very recently from Karp in his letter to investors or sort of like wrapping up last year for 2021, his presence on the conference call being all about strength, having billions in cash, zero debt, and really being prepared and able to serve, of course, on the government side with their platforms, but also these businesses and enterprises that are going to need that continued software that they can use to navigate the uncertainty. So I
Yeah.
really hope, even if the marketing and the sales isn't the best, that they're able to convey from a place of strength the importance of what they're doing.
Mm.
So I think what we've seen with the stock just historically is that it really moves based on the earnings reports.
Mm.
But that's not to say that news of contracts can start to play a bigger role, because I haven't really seen that too much with historically. It really just seems like it's traded based on earnings up or down, and of course following the macro in the sector as well. But
Yeah.
maybe expect more contract news, like if it is bigger, to have a much larger impact.
Yeah, yeah, and I think it will. I think with what's going on globally, it's kind of akin to the issues with COVID and the challenges that companies saw then, and it was certainly a tailwind for Palantir during that time, and I think they'll probably see something similar in the coming year.
I'll put your Twitter and YouTube in the description. Have you been doing any YouTube videos lately?
No, no, I've been pretty quiet. I normally do a pre-earnings video, but I put out a Twitter thread instead. So I'm much more active on Twitter. But yeah, been moving quite a bit and working quite a bit. So yeah, if I have thoughts on Palantir, Twitter is the best and first place to find it.
Yeah. So thanks again for your time, Jake. Given that you are so focused on other things right now, but yeah, this was super helpful to hear your thoughts. We've seen other Palantir community members like Sachin going all in.
Yeah,
So interesting to see how everyone's adapting currently. But yeah, this was super helpful, and I hope it's helpful for others as well to get
yeah,
this side of things.
yeah, yeah. I think so. Thanks.
Right. Yeah. Thanks, Jake.